please come to the stage. And then we are having Kano Takebayashi, program lead of Entrepreneur First. And the last but not least, we will also have Stanley from Jubilee Capital. Please welcome to the stage. Thank you. So yeah, I give it to you, Kano, to start the panel discussion.
Thank you, Sarah. Good afternoon, everybody. Welcome to today's panel discussion, The Road Ahead, Navigating a Volatile World as a Startup. Very topical, given that we're just coming out of a pandemic and we are facing current market volatility. My name is Kana Takabayashi, and I will be moderating this session. I am a program lead at Entrepreneur First. At EF, we are talent investors. We bring together exceptional individuals and build impactful teams. Notable companies we founded include the likes of Tractable, a computer vision company valued at $1 billion, a satellite comms business called Transcelestial, and many others. Today, we've got a great panel with us with diverse backgrounds, so let's kick it off with some introductions. Starting from Stanley, just a bit of introduction and what you do.
Hi, good afternoon. I'm Stanley Zhang. I work with Jubilee Capital Management. The company is a venture capital management company. We make investment to technology startup companies in Southeast Asia, Singapore, China, and United States. Thank you.
And moving on to Piyush.
Hi, everyone. I'm Piyush. I work with Vertex Ventures. We've been a lead investor in the Southeast Asia region. Been investing in the market for many, many years now. One of the older venture capital funds in the region. In our current avatar, we have network funds in the US, China, Israel, and obviously a team in Southeast Asia and India. I'm a general partner with the firm based in Singapore and Bangalore in India.
Hey, hi, I'm Vince. I'm the COO for Evolabs. Evolabs is a technology provider, system integrator, and we are also providing product solutionings and development work for our clients, pretty much in all aspects of the industry, from government all the way to various enterprises, even to the startups as well. Thank you.
Hi, I'm Alex. I don't really know what to describe about myself. I'm an entrepreneur and investor, ecosystem builder, and occasionally I'm an educator. So my full-time job, kind of like full-time job, is that I'm in a logistics company building a fintech company. So it sounds a little bit oxymoron, but yes, a logistics company can really turn into a fintech, and a very, very powerful one. And I run my own family office, so investment in the full spectrum. So from coffee plantation all the way to waste to energy as well as technology. We even dabble in some of the satellite company also. So it's a very, very cross-platform. I teach in a couple of universities about MBA, about entrepreneurship, both in Singapore and Italy. And last but not least is that I'm ecosystem builder, so most of the time I will be involved in creating an ecosystem, specifically in the space of innovation and entrepreneurship. Yeah.
Thank you. So today's topic is around sustainability of businesses. So the overarching question we're going to discuss is, how can startups navigate market volatility and grow sustainably? So let's first break down this very wide topic and focus on our region. How do you think Singapore startups have fared coming out of the pandemic? What are some of the qualities that the resilient startups exhibited? For example, at Entrepreneur First, we like to focus on certain qualities when identifying exceptional individuals, and one of it is drive to achieve. And this was particularly important during the pandemic, during the lockdown, when people were quite restricted in terms of their movement. We had a company called P Fiber, and who operate in the alternative plastic space. And unfortunately, because of the lockdown, they couldn't go into the labs. So what they had to do was make do and use their kitchen and make it into a mini lab to build their prototype to attract customers and such. So Piyush, maybe a question for you. What is your observation, I think, coming out of the pandemic, the I guess, the landscape of the Singapore startups, and what were some of the traits they exhibited amongst the resilient ones?
Yeah, I think at least in startups at the stage we work with, the one thing that we find very common is that a lot of things start and end at founders. And finding resilience within the founder mindset is actually very difficult. So we were discussing this, a physical injury is very difficult to deal with, but a mental, issue is even worse. So we actually saw a lot of founders going through tough mental times. Things were not well, businesses shut down. I think what we have recognized is, in the world of startups, fail fast is a term that's very widely thrown around. But we actually found founders who were willing to just, run at the brick wall and not stop at the first sight of failure, did the best. These were founders who proactively cut stuff on their own. They cut the flap very quickly. But most importantly, the one thing that I found the most resilient founders did was that they found models to just turn the business in a direction that they saw would work. And then if they saw it working, they threw the entire organization at it. So it wasn't just a half-hearted effort of, hey, let's try this. As soon as they saw something work there, especially in dire situations, they threw the entire kitchen sink at it. So I'll give you a couple of examples. We had this company called Ace Turtle, Singapore headquartered. They started off building a brand enabler business in India, so an omni-channel platform for brands in India. And they wanted to expand into Japan, Hong Kong, China, in the longer term. Turns out the pandemic hit and the business started going down. What they discovered was that not only was their brand business going down, brands were struggling to expand in these markets. And so what they said was, hey, we understand how brands should sell online. Maybe we onboard brands and sell them online ourselves. So they basically took over brands in India. So now they run Lee, Wrangler, Toys R Us, Babies R Us. So instead of, having the aspiration to build a global software business, they're actually now a house of brands, starting with India, will now move into Singapore, etc. And as soon as they saw this opportunity and they saw this was working, they saw that technology could really make a dent. So, for example, they could bring down inventory from, let's say, 6 months in store to 1 month because of technology. They completely pivoted the entire organization in this direction. And I think this was this was one thing that we noticed in companies, and we have 4 or 5 examples in our portfolio that really turned the ship around during the period. The ability to just identify the right thing and throw the kitchen sink at it was excellent.
Absolutely agree. Mental resilience is a key component in strong founders, and also learning to find the opportunity when it presents itself and pivoting quickly. Those are very key traits. Alex, do you have anything to add?
Well, from my perspective, or from my angle, what I see is slightly different. The core thing is that majority of Singapore's companies, startup, are not the high-tech one. It's unlike the entrepreneur first. EF, when I first bring it in to Singapore, basically the focus, because you are technology-based, and you have all the PhD, so we replicate the same model in Singapore. But there's only a minority, because the majority of the people who largely want to do is still very much an IT startup. Software, if you guys sit down together, write the code, and do something about it. So when the pandemic hit, everybody come home. Nobody able to travel, including a lot of Chinese-based Singapore entrepreneurs. Right, they are all doing business in China. They are all come back in Singapore, and so they now work on something that is locally regional. So they are based in Singapore and begin to all change. Now the China trained startup have a very, very interesting mentality. Is that profitability comes first. So surviving the whole pandemic become a lot more easier. And also that they are very much into negotiation with people and partner to try to figure out what is a win-win situation. That is an environment that is good for angel investor, good for family office, the kind of investor, but not so good for venture capital, because that they are no longer really looking at multiplying the valuation, etc. So for over these 2 years, I basically see a lot of them totally dispersed, but very vibrant online communications. So my chat and my Telegram is flooded with conversation. Everybody is thinking how to change. So everybody is pivoting. And surprisingly thing is that they don't really look at technology anymore. They look at the business and look at the business partner. Who can they work together? I mean, that is a major change. But I would say that majority of this group of startups survive.
Yeah, you touched on an interesting point around profitability. I guess the age-old questions that a lot of startups and investors struggle with is growth versus profitability. So interested to hear, Stanley, your thoughts on these, and what are some other key metrics that founders and startups should be wary of?
It's a very important topic, talking about growth and profitability. I think for a good company, you have to both have high growth and either you have a profit today or you can see you get profit tomorrow. So this is regard to your business model and how can you get a high gross margin and how you can control your operating costs. So eventually you can make money. So beyond this, I think for capital markets, how they see the valuation of your company, they not only see the growth and the profitability, but also how innovative your company is, how high your technology is, how high the entry barrier of your company have. And they also see how powerful your team is. So I think this can be the most important characters of a company.
And following on from that, Vince, how important is it for startups to incorporate sustainable plans into their operations?
Yeah, thanks for the question. So basically what you experienced over the past few years is regarding the change in the market demand and also the geopolitical dynamics that we have been experiencing lately, especially with the Ukraine war. It makes it even more challenging these days for companies to be able to operate in the normal fashion, right? So, which is the reason why we have been talking to a lot of our clients from the aspect of actually looking at how to continue to provide value, right? Consistent value, I call it, not just value, but consistent value through business operations that are sustainable, right? Something that you can put the meat around it. Not only that, we are looking at how we can actually inbuild culture, having culture that is embracing risk. So this is very important. I think for the startups here is you cannot shun away from risk, but really you must embrace risk, and that should be part of the culture of the organization. So to further on to that, right, it's like the challenges that we are facing here today is not about being resilient today, right? But rather, how can we actually anticipate and also to be adaptive to the unknown risk that is going to be presented to us next week or even the day after, right? So I think those are the things that we have to consider, and definitely the benefits of having a sustainable operations serve a few purposes here. One would be to, like, for example, you definitely be more resilient towards any unknown risk that is coming in, because you'll be much more adaptable. You'll be able to adjust. You'll be operating in a more agile environment within your organization. Second is definitely you'll be able to future-proof your business strategy. And that's important because business strategy itself, you don't expect to change it every couple of years, right? It has to be having a specific goal out there, but more like your business operations, right, can be able to continue to operate and navigate within these challenging times. I think that is, even for my organization, we are also doing a lot of fine-tuning along the way, but our grand vision doesn't change, our strategy doesn't change, right? Because in the long-term 5 years kind of outlook, we are still very positive in that whole situation.
Those are really valuable points around consistent operations and a culture of risk. So following on from that, I think this is a good question for Alex and Vince. What are your thoughts on looking to strategic partnerships to build businesses in a sustainable manner? For example, at EF, we have a business called Phasio, and they are an additive manufacturing firm, and they built a strategic relationship with DNV, which is the certification body for manufacturers. And through that led to introductions to multiple customers. We'd love to hear from you guys. How do startups identify the right partner? Alex, you want to kick us off?
Maybe I start first, is that I'm just going to take a point from Vince to segue into what we're going to talk about. That the sustainability is very important to understand what exactly it is. Basically only 3 points. The very first point is that you don't die, right? Your business continues, so number one. Number two, your market don't die, right? So the third one, the world don't die. Basically, these are sustainability. I mean, there's a very simple form. We're not talking about hugging a tree, about anything, but you will not be able to control the world. Somebody going to screw it up, you are just going to die together with it. All right, so does it mean that your small little contribution will not count? Short answer is that it won't count. Right, so be realistic about it. The market don't die, don't screw it up. Because just look at logistics, for example. We are doing logistics. And at the current situation, the price go up because everybody need the logistic to do it. So what will you do, right? But very simple, you jack up the price, demand and supply, right? At a certain stage, when everybody cannot afford, what will happen? It's just that inflation go up, recession is the next one. The market will get killed. Right, so make sure that those things that you have to factor into your consideration in your business model. Ultimately, the very important thing that you don't die. So now, when in a difficult situation, how can you be not dying? Right, recession coming, business is not going to do well. Right, so what can you do? So in the Chinese, it's very simple: 开源节流, open the source, and reduce the cost. Right, so go and do more sales. Go out. I was just looking at this 客促海. 36 Ke Chu Hai, the right-hand top light. Exactly, you go out. Right, Singapore is a very small country. You really have to figure out how to go out. Look for a partner that can help you to go out. Now, back to that definition again. What is partner? Most of the people got it wrong. Partner basically means that you don't pay the guy. If you pay the guy, he's a supplier. Right? Anybody you can pay him can get things done. After all, I pay you, better get the thing done, right? So it's very simple. So partner is somebody that you don't pay, but you have a common objective. So somebody overseas would like to look at the business coming in to do something about it. Those are the people you should look for, not somebody that want you to pay for. All right, so you must be able to find out the win-win situation, how to collaborate, not somebody that say, no, I need you. You must need both each other, okay? So that is a very important message about partner. So when you look for partner, that is a criteria, and you will both be able to achieve something. So for startup, you will constantly be going look for a partner. Most importantly, get a whole bunch of mentors that you can work with, because those are the people who will connect you. Mentors are good for nothing other than relationship. Because a mentor are not you. A mentor give you advice most of the time is not workable. Hey, come on. Before you can advise somebody, you put yourself into his shoe, but before you put yourself into the shoe, take your shoe out. Mentor is quite easy. It's okay. You are not hardworking. But ask for mentor, can you connect me or not? Be very specific about it. So that is what the usefulness about it. I mean, the folks from KrASIA, okay, I think they are very, very well connected. Folks from Alibaba, the same thing also. I think they're more than happy to just connect, but it doesn't cost them anything. So looking for partner, I think that is one of the most important part of it. And then it helps you to survive, which reach the first sustainability. And then your market is expanded, the second sustainability. As for the third sustainability, it's not really not your game. It's all the banker's game. You drill deeper into it, you realize that it's all about bank money. I'm in there. All right? I'm playing that, so I know it's not your game.
Great, thank you. Great point around the value of mentors. Vince, anything to add?
Yeah, I mean, Alex has been very passionate about this, and it's really good. So I think to address on the additional part of it, right, which Alex has already pretty much covered the whole spectrum of what a partner should be like. For us, Evo Labs, we are also constantly looking out for partners and also to work with startups as partners, right? And like what Alex has rightfully put it, it's not about the financial transactions. So once there's a transaction involved, yeah, you become a supplier relationship. It won't make any sense anymore, right? So, and that's why we go all out, right? As a partner, let's say we are the one that is leading it. So we will take the initiative and we will go the extra mile. And we expect our partners to do the same, to go the extra miles, to fill the gaps that we are not able to. I mean, we are not going to be good at everything, right? So, I mean, probably we only cover about 10% of whatever we can do in this greater world, right? Our special mention would be like Alibaba Cloud, right? For example, it's like we have been working with them for the past 2 years, I'll call it, right? And they have a good footprint around the world, specifically in Asia, right? And we are working with them very closely, and we are tapping into their, not being embarrassed about it, we are tapping into their ecosystem as well to grow our business, right? And our company has been around for 14 years, by the way, so it's not a new company anymore, but we are still working with partners. So it's very important for partners who are able to help us so that we can help them. Right, and Alibaba is definitely a much bigger player than us in all aspects, right? From the financial perspective and from their technological advancement as well. So what are the things that we can do that we can create a synergistic account or the technology, right? That we can value add. I think end of the day, all of us here, right, is we want to create value. Right, it's value creation. We don't create we don't build a startup to just for the sake of pitching, right? We want to create value. So that's where we build partnerships, so that we can build values. And who is it for? It's for our customer, our targeted customer. Yep.
Really, so thank you for the clear criteria and definition of when we say strategic partner. Last but not least, this is a question for all of you guys. I think some founders out here might be asking, what does building a business sustainably, does that contradict ambition? So would love to hear each one of your thoughts, starting with Stanley.
I think sustainability and ambition don't conflict. First of all, you have to make your company run and survive, especially when you are relatively smaller and when the outside environment is relatively bad. So this is very essential to make sure a company survive and grow. And at the same time, I think success is a long run. So don't think just 3 years, 5 years. Maybe a successful company can be eventually successful in 20 years or even longer. So you keep a big picture in your mind, but you have a very solid step by step, every day, operate your company according to your plan, and also you adjust your plan according to the outside environment change. So I think, in my mind, this is a good strategy. They don't conflict.
Piyush, anything to add?
Yeah, so here's the thing, right? There are going to be cases where someone builds a product and in 18 months' time they sell it for $150 million. Those are less than 0.01% of all startups in the world. As a founder, when founders are building startups, it's a 20-year journey, and if the journey is not being taken for 20 years, then there's something wrong with that journey. Because you can't really optimize for 18 months or 2 years. That's part one. Part two, as a founder, the most important criteria is to understand how you're going to extract value in the ecosystem you play in, which means what are your unit economics at the end of the day. So if you're selling widgets, you're selling services, maybe you make a cent on the dollar, maybe you make 10 cents. But there is a clarity on how, one, that widget journey will scale and how you will scale those cents on the dollars that you make. I think having very clear view on unit economics from the very beginning as you scale is extremely important. And just going back to the earlier topic about sustainability versus growth, if you have a clear view of unit economics, the idea that you will lose money because you need to get to a certain scale for this to play out is not lost on anyone. But if your fundamentals are strong, which means you're able to extract the right dollars from the business, there's no reason for you to fail. There are extraneous factors that will come in, but fundamentally, if you have the right unit economics, you are built sustainably, and therefore you will continue to do well. That is something that, at least as investors, we look out for very proactively.
Got it. So this is a long-term game, everyone. It's a marathon. Anything to add from your end, Vince?
Yeah, I fully agree with Piyush and Stanley on the part of fundamentals, and also it takes time, right? Rome is not built in a day, right? And rightfully for a startup, don't expect something miraculous to happen. Right? There's a lot of work to be put in to make it happen. So I always believe in one thing is that you have to put in the effort and the right resources and the right recipe in order to make your startup work or your company to work. It's not rocket science, but at the same time, it takes a lot of hard work and grinding, right? We all talk about grinding. So yeah, I think at the end of the day is, if you read the book or you know about Simon Sinek, start with why, right? I believe some of you probably have read about the book. Start with why, right? Why are you doing this? What are you passionate about? When you talk about ambition, right? Your ambition must be tied to the why. Why are you doing this? So if you don't have the why and all you know is the what and the how, you're going to just die flat after probably if one crisis hits you and you're just going to give up. So ambitions and ambitions is about where you're heading to in the long run, but at the same time being sustainable, right, is a grind, right? So basically you have to differentiate that two. It cannot be together, right? Yeah.
Really good for founders to keep asking themselves why they're doing this. And last but not least, Vince. Sorry,
Yeah,
Alex.
sure. I'm just going to draw a little bit more on what Vince, Vince always set very good stage for it. I just want to ask a question, very simple, for you to think about it, is that, are you there to make money, or are you there to make value? Because most of the time, all the startups I met, they got confused about all these things. It's just as Piyush say that no startup have a valuation at $450 million, that kind of things. Making money is easy. It's really, really easy. All right? Making millions is very, very easy. You want to know, I can always show you. Right? People like Doguan and all these things can easily just scream and you can do rug pull anytime. So the question is that what you want, or you want to make value? Now, if you're thinking of making value, then the very first thing you have to start thinking about is seek to understand. Understand everybody, understand everything, understand anything that you need to approach, all right, before you pitch, which is for people to understand you. Because that over down here, you really look at it, is that there are people that you can talk to. For example, that a VC look for what? A VC is not in love with you. The VC is not in love with yourself, your team, and whatever there is. They're looking at your company. Can I make money from your company? If you're looking at the, more traditional investor or a family office, we are just looking at, can you earn dividend? And everyone is very different. All right, so when I'm running a VC that time, I really don't care whether you're profitable or not. I give you money, I want you to burn as fast as possible. If you don't burn, I squeeze you. There's many startups that happen this way. Okay, I tell them, just burn and go. Why? There's a VC. I need you to go and raise the next round. I'll make money from the up round. All right, but after 3 rounds, you die, it doesn't matter. I have another fund to support you again. Now, this is a different game altogether, but you have to understand first. All right, so I meet many people when they pitch, it's all about, I do this, I do that, I do this, I do that. And sitting below, I'll be thinking that, so how can I use you? All right, so seek to understand, then be understood. It will carry you very, very far. All right, then once you understand, because being a startup, you're going to piss the hell out of everybody, especially when you want to be sustainable. Sustainability is very, very costly. The carbon tax right now, okay, is $5. In 8 years, you're going to raise 1,600%, which means that cost is going up. Okay, being sustainable is very, very costly. And you want to do that, everybody will hate you. How can you, all right, cut them deeply, draw blood, and yet they love you? It's when you seek to understand and then be understood.
Well, thank you, everyone. That takes us to the end of today's panel discussion. Thank you very much to our panelists, and we'd like to wish the startups presenting today best of luck.
Thank you, Kano. Let's give it a round of big applause for the panelists today.